From the campus of Yale University, this is Business Talk with Jim Campbell, nationally syndicated across the country on the Biz Talk Radio Network and coming to you from our flagship stations, Yale Radio WYBC and 1490 AM WGCH Greenwich. All talk and all business, 60 minutes of radio with leading figures from the world of business along with the business of politics and sports. Now in its 39th year, PriceWaterhouseCooper's Emerging Trends in Real Estate, the 2018 report's just out. We'll unveil the top 10 emerging cities in the nation and key real estate trends. A report from PWC and the Urban Land Institute tonight on Business Talk with Jim Campbell. Mitch Roschelle is the U.S. National Practice for PWC's Real Estate Advisory Practice, over 30 years of experience. He serves as co-chair of Emerging Trends in Real Estate, the leading industry survey published, as we mentioned, by ULI jointly. Additionally, he is the publisher of the PWC Real Estate Investor Surveys, a trustee for PWC Charities, where I know he does a lot of work in education. The Urban Land Institute is a nonprofit education research institute. Its mission to provide leadership in the responsible use of land and in creating sustaining, thriving communities worldwide. Welcome back. This is now an annual event for us.
It is. I'm thrilled to be here. By the way, for those of you listening, it's black tie optional here.
Yes, we're very well dressed.
We're very well dressed.
We'll have to go on social media, in fact.
Yeah.
And so we're going to hold people's in abatement for a while on the top 10 list and do the trends first. So as we jump into the big key trends that you guys have uncovered, what's the methodology again and the purpose, the target?
Yeah, so it's interesting, Jim. And thanks for having me. What we do is we interview 1,600 this year, so it's the most we've ever interviewed. Survey 1,600 folks. So we partner with Urban Land Institute, as you mentioned, and we send a survey out to their membership. 1,600 folks responded. And then on top of that, we interview 1,000 people. So if that wasn't exhausting enough, we do focus groups with 54 of the local chapters of Urban Land Institute just to get sort of more granular with the numbers. And then we look, as you mentioned, we're an accounting firm, so we look at a ton of data and we pull all that together. And the rankings of the cities, which we will get to, that is just really basically popularity contest. People just look at what they think the prospects are and they sort of vote and we tabulate the results. So what we do on top of that, and we'll probably get into this a bit, is we pull data on all of these markets just to make sense of that ranking. And that's sort of the last step in the process.
Does it target it at institutional?
No, it's a great question. It's really everybody. So I've said it's everybody from journalists who cover real estate or the world of business to developers, operators, brokers, lawyers, other service providers to the industry, bankers, really to everything. And it's really, I think, the diversity of that perspective. And it's also geographically diverse. So if, let's say, for example, New York City, which it isn't, spoiler alert, the top city, It's not like the preponderance of the respondents were from New York City and they were putting their finger on a scale. So we do go look at where the votes are coming from just to make sure there wasn't any. And
these cities lobby like for the Oscars? Or
they don't. But we don't change any results. So as reported is. But we do check every year just to make sure that there wasn't any ballot stuffing, and it's never happened, and I don't think that it ever will.
Okay, the biggest findings?
What's interesting is, and it's going to be tough to not mention city names, but if you go back to, let's say, 10 years ago when the city that's number one this year was number one the last time, it was actually 2009, and you took the population of all of the cities that were in our top 10, you would be at about 60 million people. If you add them up today, you're about half of that.
Wow.
So the average city size has fallen in half, and there are cities in the top 10 ranking. There's one city in particular that's 1.25 million people. Wow. So what's happened is, and this is, I think, the biggest trend, coming out of the financial crisis when this city was the number one city, people were really focused on gateway markets where they perceived there was absolute safety. Capital had rotated out of real estate. It was rotating back in. And they said, well, where can I invest where I know if things got bad again, I'd be okay? So they picked all the usual suspect big gateway markets, and those were large metropolitan centers. Now the time has gone on, and they're looking to sort of find returns that are commensurate with the risk. They're looking in places that really aren't those big gateway markets. So that's probably the biggest trend to me, which is this absolute shift away from big cities towards smaller cities.
Now, is part of that being driven by the cost of doing business and living at the big guys?
Yeah, and you probably remembered I said that last year. It's the cost of doing business, the cost of living. And another big trend, and maybe we could set this up and just continue to tease the audience with the names, but there also seems to be a correlation between college towns and young people. The cohort that we're focusing on, and we do a lot of this in the report this year, is the 15 to 34 crowd. So that's part of Gen Z and a bigger chunk of the younger millennials. So we're calling them Zillennials just to make up.
I hadn't heard that term.
Yeah, we're making up names here. Well, we actually made up the term 18-hour city a few years ago, and it stuck. So we're trying to figure out if we can make up a new name. Although,
I don't know, I hadn't heard gadgeteria before you can talk about it. But before you do that, I was really fascinated by the Gen Z workers like a little bit more structure in their office space than the guys before, which whatever that was.
Yeah, the millennials. So
millennials, yeah.
Gen Z are really in college now. And we were joking before the segment started, because you remember when I was here a year ago, I was knee-deep in college tours. So I have 17-year-old twins, so we're knee-deep in college applications. But one of the things I've observed on campus, and it's true in the workplace as Gen Z starts to get into the workplace, that what happened with the millennials is every professor on campus had a group project. Companies really put an emphasis on collaboration, and nothing has changed there in terms of collaboration. So all the office space was built around collaboration. Similarly, on colleges, the libraries all had to be rebuilt to create these rooms for group projects. That's not going away. However, what's interesting is the Gen Z population, because they did grow up with gadgets their entire life, and their communication is so tied to being digital and social media, that they're perfectly content staying in one place and communicating with everybody. They don't need to physically be together. They can FaceTime with one another. So what they want is their own little layer. So when I go on college campuses and I tour the library, which happens in every single school I go to, I find, yes, that collaboration space is there for kids doing group projects, but everybody's found that little corner in that little cubby. So what we're starting to see, and we heard this in our interviews, was as office space gets reconstructed for the Gen Z population, they may want offices with, get this, doors.
It is amazing.
When was the last time you saw a door in an office? So so the gadgeteria is really sort of a bit of a generalization in terms of the reality of how Gen Z grew up. And but we're thinking they may need doors on offices.
Fascinating stuff. I hate to think this is true for us baby boomers, but senior housing, how's that market? Is that growing enough? And it says we're getting old.
Yeah, what's interesting is that when you use the term senior housing, you often think of assisted living or age in place or even the age-restricted communities. The aging baby boomers all sort of seem to want – you can't make a generalization about what they want. Proximity to grandchildren seems to be important. But, again, they're faced with, trying to manage their estates and have proceeds from a sale of a home. So one of the things we're actually talking about in the report for a best bet is to figure out in your market what is the real need and price point for aging baby boomers and supply housing product to them that makes sense for them.
Interesting you talk about being near grandchildren. He's got 17-year-old twins going to college. We've got 32-year-old twins, and we're getting to be knee-deep in grandchildren.
I follow you on Facebook and vice versa, and I see you constantly chasing around grandchildren.
Oh, that's great. Okay, now we got a few more minutes, so I want to ask you some quick kind of questions. Is this real estate cycle a long kind of thing, or is it the old boom and bust we expect?
That's a great question, Jim. One of the things we observed, and if you go back really, really far and look at cycles back to the 1800s, you'll notice that they were very short in duration. As time has gone on, cycles have gotten longer and longer from the trough, to the peak. But the neat thing, in a good way, about this cycle is that this is not the longest we've ever had. We're closing in on it, but we're 100-plus months. Some people say it's 120 months, but that's not important. We have the lowest level of GDP growth and the lowest level of job growth in any recovery.
Wow.
So that's actually, as crazy as it sounds, a good thing for real estate because we haven't inflated a bubble. And maybe it's a good thing for our economic growth because we haven't inflated a bubble. Yes, we've had 2 consecutive quarters with 3+% in GDP growth, assuming those don't get revised downward. So we're starting to see GDP pick up. We have a tax package that may or may not get passed, which hopefully would be catalytic to continue.
I was going to ask that. So that's going to be a big plus? Or?
Yeah, the perception in the real estate world is that the tax package will be good. The fear in the real estate world is because most of commercial real estate is owned by LLCs and partnerships, and they're pass-through entities, and how that's going to work is very, very unclear. So it's a mixture of excitement with the prospect of tax reform and trepidation, not knowing how real estate might be taxed.
And you're listening to Business Talk with Jim Campbell. Coming up, the top 10 list. We're talking with PWC's real estate research leader, Mitch Roschelle, with apologies to David Letterman. It's time for what everybody's been waiting for, the top 10 emerging markets in real estate. And number 10.
Number 10 is Boston. Boston had been out of the top 10 for a while, but it's back proudly. Number 9 is Nashville. It's third year in the top 10. Number 8 is San Jose. Spoiler alert, its neighbor to the north, San Francisco, is not in the top 10. Number 7, its neighbor to the south, Los Angeles, where I just returned from. Fort Lauderdale, new to the top 10, never been in the top 10. Jim right now is thinking about spring break when he was in college, so we're going to come back to that later. Number 5, Dallas-Fort Worth, which has been a number 1 city 2 years ago. It was number 2 last year. Raleigh-Durham now for, I think, the 4th year at number 4. Another new entrant into the top 10 at number 3, Salt Lake City. Last year's number 1 is now number 2, Austin, Texas. And drum roll, the number 1 city for real estate investment and development prospects for 2018, according to Emerging Trends in Real Estate. Number 1, Seattle, Washington. Dun, 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 dun.
You know, what's interesting to me is that if you look at the trends going forward, those are NFL teams, and they're meaning attached right to big areas. But the future's not going that way, right?
Austin is a big college football town.
That's true.
Yeah, Salt Lake City, no NFL franchise. And
why is Fort Lauderdale
moved elsewhere?
Why Fort Lauderdale? How did they sneak in?
So Fort Lauderdale and Salt Lake City, similar trend in that they're smaller cities, but they both have in common, and we talked about it in the previous segment, is a growing population of those millennials, the 15 to 34 crowd. So in both of those cities, that population is larger than that cohort is in the United States. So it's 27% of the U.S. population, 15 to 34-year-olds, 27% of the U.S. population. And in the case of all the cities in this list, that population is larger than it is in the U.S. and growing faster. So I believe in Fort Lauderdale, it's growing at 4 times that rate in the U.S. And in Salt Lake City, I believe it's growing 3.5 times that rate. So that's the worker of the future. That's the first-time home buyer of the future. Most of those workers, they're skilled. So one of the other things we're observing, there's a lot of proximity to college and university in all these cities. So there's something we're referring to as the study and stay phenomenon. So kids graduate from college. They may not be from there, but they like the area. They find it affordable to live. So they stay put. They find work. Companies realize that there's a pool of skilled labor that has the right skills. Companies go there. Companies find them a place affordable to do business. Like Salt Lake City, which is 88% of the national average cost of doing business. So you get into these virtuous cycles with companies and workers, and that's why these cities prosper. Real estate investors, see that, and they say to themselves, wait a second, let's go where the economy is growing, where we'll have opportunities to develop real estate, we'll have opportunities to invest. A little funny thing, somebody came up to me on Thursday when we launched a report in Los Angeles and said, I can't believe you put such and such city in the listing. I said, why? He goes, we spent a couple of years trying to figure out where we want to go, and we targeted that city, and you put it in the top 10. I said, well, I guess our great minds are alike. He goes, no. He goes, now everybody knows. And I said, we surveyed 1,600 people. A lot of people pick that city. You're not alone. So, but that's the who's in the top 10. Again, who's not in the top 10, I talked about in the previous segment. New York, Chicago, San Francisco, Washington, D.C., the D.C. suburbs, even Brooklyn, which is broken out as a separate market in here. They're just viewed as being the barriers to entry to get into them from an investment perspective. The price threshold's too high. It's not for everybody in the real estate world. And again, this is commercial real estate investment we're talking about. It's not for everybody. Doesn't mean that they're bad markets to invest in. It just means that people looking for what's emerging. One of the things we've done is we've changed the way we phrase the questions a little bit to put emphasis on the word emerging. So we've got more people looking forward as opposed to looking backwards.
So you might expect a little bit, because I was kind of stunned. New York went down to number 46.
Yeah, it's just it's not. And by the way, we could easily see a record number of real estate transactions taking place in New York in 2017. I mean, it's possible, or in 2018. Highly possible, and foreign capital loves New York. New York has always been viewed as, in these big cities, as the safe place to invest. Truth be told, if you look at what happens in recessionary periods, New York is the only market that really holds up the best in terms of recessionary periods and then bouncing back, if based upon real estate closed transactions post some sort of a crash. But capital is always going to find its way to New York. It's just that it's not new, and we're trying to focus people on what's new. It's not emerging.
Houston dropped to number 60, and that's energy related. So that's
both Miami, Houston. All the survey work was done prior to those unfortunate hurricanes. It's all energy related for the most part. And one of the things that is interesting about Seattle, if you look at the top 20 employers in Seattle. In that list, you will find number one is a company in the aerospace industry. You'll find 3 retailers. You'll find a handful of technology companies. You'll find an e-retailer. You'll find colleges, universities, local government, state government. You'll find all of those things. But you'll find an incredibly diverse, from a sector perspective, employment base. That's the reason cited by most real estate investors as to why they like Seattle.
Fascinating. Is there somebody that's coming up that's going to surprise us in number 11, 12 kind of thing? Anybody that you would tout?
After seeing Fort Lauderdale on the list, I would say nothing surprises me. It's probably a Pittsburgh, Tampa. I would say Tampa finds its way into the top 10 list. And I'm not saying that because I speak there every year and gotten to know the mayor really well. San Antonio, Texas will find itself.
I'm not hearing a lot of East Coast or.
No, East.
Again,
you know what I would
overpriced?
say? I'd go out on a limb. I'd say Northern Virginia could find its way. It's moving up in the rankings.
How about in the Midwest? Madison, Wisconsin, anywhere near Chicago, that kind of area?
Madison, Columbus, Ohio. Both of them have that secret sauce, which is their college towns. And but kids aren't staying as much in those places as they are. They're flocking to warmer weather. We were joking about colleges before. My kids have set their sight on towns with palm trees for where they want to go to school. If you live in a cold environment, at some point you want to get where it's warm. So.
It's a great way to end, and also this contribution you guys make each year, that it gives you a good feeling about the country, because these really are emerging areas, and things are spreading out. And there's obviously people that are bullish. Where can folks get the report if they'd like to?
Yeah, it's great. And hopefully you're not driving right now when you're hearing me say this, but it's PWC.com/US/ETRE, which stands for Emerging Trends in Real Estate. So it's PWC.com/US/ETRE. And you can download a copy of the report there. It's 100 and something pages. You might want to download it digitally to be green. But there's also 10 buttons you can press with each of the top 10 cities. Oh. And there's a page of fun facts about them, which is more detail than I could go into here if you want to get a feel for why a city's in the top 10.
It's always a lot of fun for us, and it's also an honor to be associated with PWC. Emerging Trends in Real Estate 2018, done with the ULI. Top 10 cities. We'll find out what the movement is next year. Thanks to Mitch, Roschelle. You're listening to Business Talk with Jim Campbell.